What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. It's a late video being released today. I'm going to try to keep this intro a little bit calmer in case people are watching this as they're laying in bed. But we've had a lot of positive price action here in the cryptocurrency market today that I wanted to touch topics on. It's rare that I get to. A lot of times in the morning, we tend to be more red in the morning than we are in the afternoon. Yesterday, we were red all day, and then the market closed green right at the end of the day, which you can see over here on the market cap for yesterday's candle. But today's candle, we got a big move up here today. So what's going on in the cryptocurrency market this afternoon and this evening with lots of double-digit rises over here in the market, including Ethereum sitting there at 1627, which, like, if we look at what's been going on in here, if this was some type of distribution pattern that was happening in here and then we were going back in for some kind of a retrace, well, we've now poked up above all retracement levels here on Ethereum, so pretty decent pop up here. But what's the cause for the prices to move up so quickly, so rapidly? Well, like we've been discussing this week, there's a lot going on. We are having corporate earnings this week. We've had the Fed come out and do the interest rate hike and forward guidance. We will have the GDP numbers released tomorrow morning. So that gets released at 8:30 a.m. Eastern Time, 7:30 a.m. Central Time, 5:30 a.m. Pacific Standard Time, and 12:30 UTC. Tomorrow morning, the United States GDP second quarter numbers will come out to determine whether or not the United States has officially entered a technical recession or not. But we got this big move up happening in here, as we were talking about in the video earlier this morning, right at the Federal Reserve interest rate hike meeting. They actually did the announcement right in here, and there was not a whole lot of price action that happened in here, but the prices popped out when Jerome Powell, the chairman of the Federal Reserve, came out and started speaking. This was also the case over here for the United States stock market for the Dow Jones. Wishy-washy after the announcement came out for a 75 basis point hike. But once he started talking, boom, prices started firing up. We won't go through their whole press release, but the very first sentence that is here in this press release from the Federal Reserve is recent indicators of spending and production have softened. Now, they go in here to talk about the rate hike that they have. They talk about how they intend to continue combating inflation, all that good stuff, Russia, Ukraine, all that good stuff. But what was so interesting about this is the very first sentence. Recent indicators of spending and production have softened. And as Jerome Powell spoke, he fielded a lot of different questions, but one of the big things in there is saying that rates have now gotten back to neutral. Then they changed their rhetoric of being like, we are here to just continue raising rates and continue fighting and continue raising, and saying that they're going to back off from that approach and they're now going to be more data driven. So if you've noticed over the last several months, the tone has been very strong that we're raising rates, we're fighting. Now they're sitting back and saying, hey, we're going to watch the data and make decisions based off of the data that's coming through. So we're getting a pivot in the wording that's coming out of the Fed. They haven't pivoted and said, we're not going to do rate hikes anymore, but the rhetoric coming out of the Fed has changed now. They've acknowledged that recent indicators of spending and production have softened, and they've acknowledged that they are now at neutral and that they're going to be monitoring the markets moving forward or monitoring data on the decisions that they're going to be making moving forward, if we're going to be heading into some type of technical recession or whether or not they've got to change the way they're doing things. Either way, they've changed their tone. They're no longer the super hawkish Fed that they were, but now they're going to be more data driven, and the markets liked it. There were a couple of things I didn't like that came out of this meeting that just didn't feel honest to me from Jerome Powell. One, he was asked if he has seen the GDP numbers that are going to be coming out to say if we're in a recession or not. He said he hasn't seen the GDP numbers. I'm sorry, man, but you're the chairman of the Federal Reserve. You're raising the interest rate by 75 basis points. You know that GDP is coming out tomorrow. You know if it's going to say if we're in a technical recession. I cannot buy it for half of a second that he has not seen the GDP numbers. So that came off as either dishonest or unbelievable to me. It's completely unbelievable to me that he hasn't seen it. And then it begs the whole question of why did the Fed have this meeting scheduled the day before GDP numbers get released, right? Like this wasn't planned out a long time ago to have these dates happen in this order where they come out and they have their announcement. They get to do their interest rate hike the day before GDP numbers come out. It's like it probably knew it 6 months ago that when this GDP number comes out, it's going to say that the U.S. is in a technical recession, and they would have been backed into a corner with an inability to raise interest rates by 75 basis points without some type of political lashback, right? So they have the meeting the day before. Yeah, I haven't seen the numbers. Yeah, I don't buy that for half of a second. Also, he was asked if we were going to be in a recession when the GDP numbers do come out, if they do indicate that we're going to be at negative growth for a second quarter in a row. And he too is kind of like, well, I don't know if we'll be in a recession or not because, the labor market is so strong. But we could clearly see it. Unemployment is ticking up. Yeah, it's not aggressive yet, but we could see that unemployment is ticking up. It has changed directions. But we now have 2 months until the next Fed meeting. It seems pretty likely that these guys are going to have to calm down on fighting all this stuff with interest rates. So I didn't like those things, but the market recognized what he was saying. He was more dovish than he's been hawkish. They've been incredibly hawkish. Now they're saying they're not just going to, blindly be raising interest rates. Now they're going to be more data dependent on seeing how the economy is doing in regards to what they do moving forward. So markets like that and cryptos like that at the same time. So here we are. We've gotten through a bulk of this week, but we still haven't gotten through GDP, and there's still one more day of corporate earnings to come out. So we did get more earnings this afternoon coming out of Facebook or Meta, Ford, Etsy, Upwork, Qualcomm. Not the best earnings out there. Nothing to go cry home to mom about. Tomorrow we've got a whole lot more. Tomorrow we've got Amazon, MasterCard, Barclays, Southwest, Frontier, a whole lot. But tomorrow's kind of our last big day with earnings. And then tomorrow morning, of course, we have the GDP stuff. So we've gotten through a bulk of all of this. But still, the big thing tomorrow morning is going to be that GDP. What's going to happen there? The Atlanta Fed's GDP Now model is forecasting negative 1.2% real GDP growth for quarter two of 2022, which is a revision from negative 1.6%. But still, even if we get a negative 1.2%, that puts the United States in a technical recession. If you look at the GDP estimates from different banks, we can see they vary all across the board. We can see Visa, Bank of America, TD Securities, all these at least negative 1%. So Visa negative 2.1, Bank of America negative 1.5. Go to the opposite end of the spectrum. We have Wells Fargo in here at 0.2%, so positive GDP growth. Go down here to Goldman, 1%, Morgan Stanley 1%, JP Morgan 1.4%. So we're all over the board. There doesn't seem to be consistency on where they think that GDP is going to lie. But the Atlanta Fed GDP Now model says negative 1.2%. So a nice pop today. Nice to see a ton of green on the board here. We see the total market cap's up 7.62%. The altcoin market's up 7.69%. We even have an Ethereum Classic up here, up 31%. Up a whopping 129% here just in the month of July. And like we said, we have Ethereum going back through all these retracement levels here after this Fed meeting. But the thing is, looking over here at Bitcoin, right, we've talked about this week, heading back down into these price levels is somewhat of danger compared to what we've seen happen before. Even look over here, what happened back in the past, we come back down, you move back up. Nothing in this structure has alleviated you from having something happening like this in here. So still not safe and sound here for Bitcoin as we head into tomorrow. Once we get through tomorrow, the market will pretty much have all the information that it needs. We'll have had Federal Reserve meetings, interest rate hikes, forward guidance, corporate earnings, GDP, and we'll have the final corporate earnings at the end of the day tomorrow. And well, we've seen what has happened many times in these types of situations and how they can just flip themselves right back around really quick. So we have a lot going on tomorrow. We're not out of the woods. Awesome to see all the green price action over there. Encouraging to see Ethereum get back through all these retracement levels and to see things like Ethereum Classic up 31%, Uniswap up 21%, and so many of these up over 10%. And even XRP over here getting a nice pop up to the upside as well. You can see I even have an alert that was set right in here because I was monitoring something on XRP and that we could see that XRP had pulled right back down to a 702 Fibonacci retracement. So I was trying to see if we were going to reverse off that thing and if we were going to break through it at an alert ready to set and go off. But you could see it popped right off that 702 retracement in there. So back to Bitcoin. And at this point for Bitcoin right now with where it's at, the only thing that would change the structure of what has happened in here for it to not be like this, for it to not be like this all in here, and for it not to be like back in here would be if Bitcoin can pop itself right back up to above where it came from. It would have to get above $24,300 in order to say, nope, it's not like any of these anymore. But currently right now, we're definitely still within it. And it'll be early tomorrow morning when that data comes out. It'll come out before the markets open. So Bitcoin will likely get the opportunity to react to the data if there is going to be a reaction before the rest of the market does. So great to see all that green, but we're still not out of the woods just yet. I think even the price action that happens tomorrow can still possibly be misleading on what's going to happen with the market. It's not, I don't think it'll be until Friday till we could really kind of be like, all right, the market knows all the information now. What does it have to say? But man, when I look at things like Ethereum Classic, which, we're heading down here, we're having all of our torture in the market with the crypto market as well. You have, all the, Fed is hawkish, don't fight the Fed, all the craziness, all that stuff. What? At peak fear in the market, what did it do? It marked the bottom in here, and it has been upward trajectory ever since that moment. With Ethereum Classic now back at April pricing. So still not out of the woods just yet over here on Bitcoin, as it still hasn't gone back to take out these highs, but definitely encouraging over there on Ethereum through all the retracements. So great day, ending super green over here in the market after the Fed meeting, and with the Fed seemingly changing their rhetoric. So cool to see all that stuff. Quick update. I'm going to go ahead and wrap this up. It's going to be a late release tonight. I'll let you get to bed if you're watching this late. Some of you will catch it in the morning, but for those who are watching this late at night, I hope you have a good night's sleep, or I hope you're having a wonderful morning if you're waking up and watching this. Otherwise, I'm wrapping this thing up. I probably won't get a video out until tomorrow afternoon, so there probably won't be a video in the morning, but in the afternoon. So I'll catch you guys then. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.